What's up everyone, Sanjay here. Now, I've been asked many questions over the last, I don't know, 10 years on specifically unit trust. How is it? What is it in the first place? Does it even make money? Can you even profit out of it? How is it different from all the other investments? So I decided to make a video today to share with you about the different aspects of what a unit trust is, how do you actually make money out of it, and how can you actually maximize from it. So what is unit trust? Now if you look at it in Malaysia, we have approximately 20 odd companies that manages funds, and each of these company has many funds under them. Some of the largest one has over 200 funds, some of the smaller ones have 3 funds. So if we look at how the management is done, you have one company, let's call it company J. Alright, so company J has 5 funds, and if we look at just one fund out of it, you have company J as the manager, and next to it you will have a trustee. Now the trustee's job is to make sure that whatever money that is invested, your money, my money that's invested in the fund, it's executed by company J and they are guarded well. So the trustee's work is to guard the funds, the manager's work is to manage the funds. So in the event the manager is out of the picture, goes bankrupt due to poor management or whatnot, it is the trustee that is holding all the investment certificates and also the money. Right, so come back to company J. They have 5 funds. So as an investor, you're wondering, how do I invest? What are the funds I should actually choose? Which fund do I put my money in? So if you look at each of these funds, they have different categories. Now I will break it down into 3 main categories so that it's a simple understanding. So the first category is called equity. Equity means stocks and shares. So when you invest in an equity fund, you're investing in stocks and shares. If you look at one fund, they have a bunch of equities under them, right? So these funds offer higher potential return when they're managed well, and they also offer higher levels of risk. The second type of funds, the second category, is called a bond fund. Now a bond fund is basically borrowings. Money that is kept in a bond fund is used by the managers to borrow the money out, and based on the borrowings they get back returns in terms of repayment, right? So if you look at it, bond funds offer a slightly lower risk, in fact much lower risk as opposed to equity, but then also the growth is not as exciting as an equity, but a very stable growth. Now the third type of fund is basically a REIT fund, R-E-I-T, real estate trust fund. Now what a real estate trust fund is, basically real estates. So if you invest in a real estate fund, what company J would do is basically use that money to buy properties or to invest in properties and rent it out or manage that property, right? So when done well, it basically gets rental rates, it gets property appreciation rate and so on if they sell it. So if you look at it, the risk is completely different from an equity and a bond, right? So a risk in a real estate fund is very different in a sense that you have all these other taxes involved in real estate that the company has to manage, the company J has to manage. So in a long run, or rather in a simple understanding, as an investor, how do you choose what funds to invest in? Well, this is where you have to identify your own needs. What are you investing for? Are you investing for short term? See, a lot of people invest for short term. When you think about unit trust, short term is always 5 years, 3 years to 5 years maximum, right? Minimum as well. Any lower than that, unit trust is really not your option. So if you look at a 3 year to 5 year, when you look at what are the goals you have for 3 to 5 years. Some people want to buy a house in 5 years. Some people know that they need to get married in 5 years. So this is where you design, or rather you choose the appropriate funds when you're investing in these markets. See, a lot of people get burned in unit trust because they choose the wrong funds for their wrong time frame. All right, their goals may be short, but then they choose the highest risk funds, right? So what I do basically is determining what exactly is needed when someone wants to invest their money. And even if unit trust is an appropriate investment vehicle for them, right? So long story short, you can make money in unit trust. In fact, you can make a lot of money in unit trust, but it is the funds you select and the strength of the fund managers themselves. So determining, knowing what you're investing for, knowing how long you can invest for, and also what are the funds you're investing and what are the risk elements in the fund, right? Now, basically what I do when I sit down with someone is show them what is the potential of a unit trust, and I also share with them what are the risks associated in unit trust. So some of the other things that I do for my clients is basically, some of my older clients would want to actually have a reoccurring income, so that on a year-to-year basis they have a X amount of income so that they can retire peacefully, right? But again, it comes down to the risk appetite they have, and it comes down to how much of understanding they have in unit trust. So that is a unit trust in a whole, basically how the structure of it works, right? In my next video, I will share with you on the numbers, the percentages, how do you actually make money out of it, and also how do you invest in it. Because sometimes if you look at it, there are many ways to invest in it, but then it also comes down to how much of risk you're willing to take. All right, so I'll see you in the next round. Peace out, everybody. Catch out soon.